Hey, what's up? Can you let me know if you can hear what I'm saying? Hey, what's up? Yeah, it's all good. I can actually hear it now. I'm just going to wait for a couple of more people to come in. And there's a couple of guys that might want to know about what happened today, or should I say over the past couple of days with Ethereum. Hey, what's up? I'm just sharing this to my Discord just so the guys in there know that it's happening. And then we'll start talking about what is actually going on with it. Okay, then. Start from... Start tidying up this here. How we doing, guys? Let me know who's in here so I know who we're talking to. If you were in the live earlier on today, and if you have been in the live for the past few days as well, let me know who's about. If you're new here, just bear with. I'm just going to talk about Ethereum's behavior of the past few days. Yo, Dutchman, what's good? What is good, my friend? Good to have you here, man. All right, cool then. Well, what I'm going to do is I'm going to get straight to it. So if you guys were joining in on the live streams of Ethereum, usually I'm all for forex and all the pairs. It's got the new series of breaking down the pairs. We're incorporating the crypto in there because it only makes sense. Man, that's a science in itself, bro. That is a science in itself. I don't blame you. Back testing. I don't remember the last time I actually back tested. To be honest with you, I've never had the patience for back testing because the problem with back testing is when you're back testing, if you're doing it on, I don't know, say you're doing it on a demo or you're doing it live, because it's previous performance, I don't know if the spreads are going to be applied accordingly. And if you do it on demo, that is, don't even backtest on demo, because you're not going to get the true element of the spread, because the dealer, he's not going to really care about your account getting spiked to the high or spiked to the low and taking out stops. So I've always been one to always forward test, say, all right, let me take 50 quid and I'm going to test this strategy and forward test it and see where I get after 10, 20 trades. But everyone's different, man. Everyone is different. When you start doing code and stuff, it's a different story. I mean, you're like this, what I've got here, this dashboard here. This was created by a good friend of mine. Yeah. Yeah, that came into my head straight after. I thought, yeah, but you can do that. So, but yeah, you can tell that I don't really backtest. But yeah, this dashboard has like got 9,000 lines of code. This is what the guy told me. 9,000 lines of code. What is that? That's unbelievable, man. Unbelievable. But yeah, I'm just waiting to see if any of the guys are going to come in. we'll talk about Ethereum. What you actually backtesting, Corey? Cool, cool. All right, let me just get straight into it. So, when did we start? We started a couple of days ago, and it was when Ethereum, we started off here. All right, we started off on Ethereum's peak formation here. Had a couple of guys asking me, well, you know, why wasn't this the peak formation? Why couldn't we use this? Well, there was no reason why you couldn't, you know, because it still printed the pattern. You've got to understand when you apply the pattern and all the discussion I'm going to be talking about right now with Ethereum, you know, it's what I do mainly with Forex pairs. So if I bring up Kiwi Yen, okay, this here was, we spoke about the peak formation at the bottom here, where we did the W. We've got the images somewhere. I'll bring those images up for you right now. Okay, so we've got, yeah. So this was Ethereum when we did the drawing. We drew the peak formation here, level 1, level 2 start, level 2 end. Now we're waiting for a drop to the downside, up, and then we're waiting for level 3 to form, and then Kiwi Yen effectively is going to drop. Okay, so that's pretty much what's happening here. So we're waiting for it to range. This is still level 2. You know, we haven't actually seen a push to the upside to form a level 3 for us to convict that we've got a new peak formation happening. All right, ideally I want to be seeing it hit the 75 mark before we actually think of a new formation. But anyway, yeah, so we're talking about Ethereum's movement. So on the live streams that we've done, we really spoke about candle shoot with the other indies making. So we started this live stream this week at this peak formation. We anticipated that Ethereum would take certain levels, all right? And it did just that. So I'm going to pull up the actual image from Ethereum's move. Okay, and so that way you guys can get an understanding of where we're going with this information. Okay, let me find that for you right now. I've got hundreds and hundreds of images. Where are you? I believe that is it. There you go. So this was this week at the start where we drew this peak formation right here. All right. Now, based off the behavior of Ethereum, you know, you've got the 200-day moving average here, right? And that was pretty flat. And the 50-day was just moving up and down all the time. You know, it wasn't going anywhere. But for me, it was these candlesticks here, these big green pushes. All right. And the confluence of support at the 200 days. So you've got area here and then the area here. Okay. These were effectively the conviction that we would see further ground to the upside, and it would at least take out the previous day's high. All right. Now, if we jump to the actual chart itself and we see what it did. So here's that area there, and there's that big green candle there. If I just move forward. All right. And so we anticipated that it would take out this previous area here. All right. And there was no reason for it to not do that because of all the pressure that was coming up in this range here. And we said that when you've got M formations, so you've got these here, where are they? You got these pivot points, your M2s, your M4s, and your M5s. Okay, M2, M4. The theory says that whenever prices are M2, if there's strength, it will hit to M4. All right. And that's exactly what happened over here. At this line here was M2 at the test of this 50-day here. All right. And all we wanted was price to go up to the upside, take out M4. All right. But because the range was quite tight, M4 range was quite close to the M2. But as you can see over here, it's quite, you know, there's quite a big swing. I mean, we've got, how many points we've got to that? Yeah, we've got a lot of points all the way up to there. 272, effectively 272 points up there. You know, that's quite a big move. All right. Now, we spoke about how the 200-day and the 50-day would need to effectively hold for us to convict it to go further to the upside. And that's exactly what it did. You know, these pushes in price, green candle, push. Now, remember, these green candlesticks are, and the red ones, they are, it's volume, it's tick volume. So how many times does price exchange hands at that point in time? All right. Now, we don't have a true figure of what the volume is. I mean, it says there. I mean, I can pull up the actual candlesticks themselves, the volumes, put them into the chart. All right. And we can see that, you know, you've got quite relatively low, notable volume. And then this, if you look closely here, you can see that's effectively like a little doji there. All right. And a spike to the high on high volume. All right. So they were containing price in that area. They wanted price to go further to the upside. All right. They just took out the previous day's high and they wanted to send price higher. All right. So from that point there, all right, it was more, for me, it was a conviction that we were going to continue to the upside, because a lot of guys would have looked at that and said, right, it's taken out the yesterday's high, it's pinged to the high, I'm going to go short because it hasn't followed through on this candle here. But when everything's stacked in your favor, for example, you know, don't ever trade against the averages. The 50-day was pointing upwards. The 200-day was pointing upwards. Even your 5 and your 13 was pointing upwards. All right. Your 5 and your 13s are effectively signals. You know, whenever they cross each other, if they cross above the 50-day, you've got yourself a signal. Here's your cross down here. You know, but you've got to remember, with smaller averages, they'll cross all the time. Look, there's a cross there, you know, and there's cross here. And, you know, you just got to, it has to come in with confluence. You know, there has to be a number of things that happen. I mean, we've got the TDI down here where you've got, whereas it makes a low here at the 200-day. It's outside the volatility band, but back inside, which tells me effectively there's a little bit of divergence there where it's closing higher as it's making a newer low. All right. So at this point here, it was trapping traders, short sellers, in the belief that because it didn't break out this previous high here, then they were going to continue to the downside. So they effectively trapped a few guys, got the liquidity, and then they shifted the zone and they went up. All right. And they continued to ride this. That's the 25 weighted moving average, 13, and the 5. All right. Just so if anyone asks. This red candle here, all right, it's quite symbolic. This red candle would appear to be a sell-off, okay? But what it is, it's actually the bigger players in the game in Ethereum, all right? Because I'm not saying market makers. Yeah, there may be market makers behind price, but I do believe that all the crypto markets are heavily influenced by the true element of supply and demand. You know, when someone's buying, the price is going up. But I could be wrong. I don't know if there are market makers in the crypto exchanges or not. There must be, because the behavior that we're looking at on Ethereum is no different to the way it is on, you know, pound sterling, right? GBP, USD, sorry. You know, look, you got M pattern here and down we go. You know, you've got peak formation low, up it goes. You got level 1, level 2, level 3, peak formation, M pattern, pings it to the high, 3 pushes to the high. Okay, that's your market makers setting you up, making you believe that price is going to continue to go higher. All right, it always starts with 3 pushes. All right, you've got your M formation there, developing right there. They send price up a little bit higher, but they don't allow it to take out any of the orders up here because money is trapped up here. Remember, the guys believe that this pullback to the 50-day was strong, so this one should be likely to happen as well. So they added to this position, and then before you know it, they've pinged price and shifted the zone, and then bang, we're now in level 1 formation down here, back up, and now we're waiting for it to drop. So let's just take an image of that, and we'll talk about GBP USD next week. All right. And we'll show people why, once you understand the cycles, okay, you're able to literally, if you know where you are in terms of a cycle with the market makers, It doesn't matter how much time you spend in trading. If you've got the cycles put down, you don't even need any indicators, guys. You know, because if you know where the market makers are going, then you've got it down to a T. So back to Ethereum. All right. Now, pay attention here. You can see, as I was saying earlier on about the red candle here, right? This looks like a sell-off, but what really happened here was it was an opportunity for the market makers, right, to add more positions, all right? Because remember, when price is rising, all right, they're effectively getting shorts at the highest possible price, all right? But at the same time, they're closing longs, all right? Now, when they're selling on the way up, all right, they are actually building their shorts because they have one target to hit and then they have another target to hit, all right? So now look at this. They pulled price back down and then they instantly snapped it back and continued. And then they pushed out of the zone to make sure that they wouldn't allow any of the money here that they got trapped to go down further. Because remember, guys, they don't want us players to see a profit. They use our money to make money. You know, they use our liquidity that's sitting in the terms of stops. You know, so you can imagine you've got stops here, you've got stops here, okay? Guys who entered here, you know, you've got stops all in these areas here, and the market makers, they don't want that money that is there for them to use to send price higher. They don't want you to make a profit on it, all right? They may let you see a little profit, but their bigger intention is to, you know, change the direction and use our liquidity, retail traders' money, okay, to move price. So you can see they shifted the zone and then they just trailed slowly. Did exactly the same here. Look, did exactly there. They pinged price to the low, snapped it back, sold off, gathered a few more positions in Ethereum. Up they went. Now, you see where it gets interesting. When you see these green candles, this climatic behavior, probably everyone last night all over the world was saying, oh, Ethereum's going to the moon, Ethereum's going to the moon. All right. This was climatic behavior. It's giving guys the illusion that, you know, you're going to miss out on something. And then they started dumping, selling off, sold up, selling off. And then they entered one more time here and created what would be the double top, which is actually the M formation. And what they did was they did a couple of railroad tracks here. They didn't allow any more money to go above here, you know, because they knew how much money was being put in here. And they had built their shorts all the way up, all right? And then they shifted the zone. They did exactly that. They broke through the 50-day. The guys who were hopeful about Ethereum, okay, started to add to their positions again, thinking that it was going to continue to the upside. I mean, look, notice the wicks. The wicks are working the lows, all right? They're working the lows because they're grabbing up all the guys who were trying to get in cheaper under Ethereum, all right? And then this is when they start changing things about. The fact that they failed to break this area here. It's like when you understand, when you see the pattern, okay, you know that the pattern is effectively complete. They could have actually sent price higher up, but it wasn't consistent with their behavior here. Why would they send price up, pull back, attempt to take it out again? They would have taken out price up here. Why would they try and take it out from here? You know, they would have lost too much ground. They've already closed some of the positions that they've opened from the previous run up. Why would they try and continue to the upside? You know, they know that guys are trapped long. So they need to maintain that element so that they can use the liquidity of the guys who are trapped long to go down south. And that's exactly what happened. Push down, impulse down, broke the 50-day, tested the 200, made guys believe it was going to go short at the 200-day, got them trapped here and sent them all the way back up, took out their shorts. Let's check something. Yeah, 600, 580. Yeah, it's consistent. I mean, the stop losses on Ethereum, because of, look at its spread, like it's just wild. You know, it's, I wouldn't say 25 pip stop here. You know, it's just weird how the function of it. You know, I mean, I don't trade Ethereum on this platform here. It's only because I've got my tools are on this platform here as such. But anyway, from this peak high, all right, we started doing the streams again. And the next day we did this stream where we were looking for a bounce back to the high, all right? But you've got to remember, we effectively this says that it was a level 1, okay? And I was wrong in this instance, all right? Because it needs to break this area here for it to be a confirmed level 1. So this would have been level 1, okay? And then this down here would have been the level 2, all right? So we were expecting another push down, and that's exactly what happened, all right? So this formation here was wrong, all right? Now, looking at Ethereum, if you notice from this move, I mean, Ethereum has been going up for a while now, okay? Now, this drop in price, okay, is, if we look at the hour time frame, it's very consistent with the upward trend as such, all right? Because we've been trailing upwards for how long? Look, we've been going and going and going and going, all right? Guys have to take a profit. You know, because the move didn't happen progressively, you know, it's pretty much a bit of a flash drop, as guys call it, a flash crash. You know, slow and steady is the true trend. When it's fast, it's false. All right? And all they got was these quick profits. They just built their profits. And if we look closer here, here we go. Earlier on, I told you about the red candlestick and the importance of the red candlestick at certain areas. They did exactly just that here. All right. They pinged the range daily low. This is on the hour time frame. They pinged the range daily low, railroad tracks. And if you look at the stream today from this morning, there were 2 parts to it. The first part was about 3 hours long, and the final part was 5. All right. I'm not expecting you guys to watch all of that, but if you just get the cursor and scroll to the side, you'll just see how this pattern develops. Okay, so we started off at from the Hong Kong Open. Okay, we drew our pattern. No, sorry, at the London Open. We drew our pattern at the London Open, and we were anticipating that we would get a test to the downside, all right, and price would then go up. We were waiting for the second leg of this W, all right, and that didn't happen, which gave me the idea that, you know, there was strength in this move because the bulk of the move, or should I say the support, came here. Right? You notice rising volume and it was at M2. So my conviction for Ethereum is if we've got support at the M2, we're looking to hit the M4. All right. So that's my range for Ethereum. All right. And as you can see with this squiggly line here, I'll drop down to the 15-minute time frame. All right. You'll notice that we're waiting for Ethereum to rise, drop, peak formation, and then drop again, correct, drop, form another formation, and then go to the upside. All right, because, you know, they can't effectively ruin the market. You know, they can't keep dropping price, keep making it crash, because then there won't be anyone there to play the game. You know, they won't do it. Corey, do you look for weeks to take out previous weeks and the price combined with formation? The thing is, the wicks, Corey, they're important, okay, but not in context of, you know, are they taking out previous wicks? All right, you've got to look at wicks in the sense of what's the market maker trying to make the retail trader do? All right, is he trying to induce guys into believing that there's going to be a new high? Or, you know, let's look back up here. Look at this area here. All right, if you pay close attention to these candlesticks here, right, you've got, let me draw the lines here so you can see. So that was effectively the high right there. All right, ping to the high, came back down, and they didn't want, look at price, how it just stays below that area. And these two pings to the wicks, these two wicks to the high, you know, your railroad tracks, all right? It's just so they can grab the last bit of liquidity, make the guys believe that it's going to continue up. Because remember, there's an influx of orders coming in, and the market makers can see that. They can see that order flow, so they know that they can just ping price a little bit higher just to absorb more, you know, a little bit more liquidity. And then before you know it, they snap it back. And remember, it started off here and, you know, it pinged to the high. Well, anyone that got in here or got in this candlestick thought that this was going to be a continuation candle. all right? A confirmation candle, whatever you want to call it. And they just, and they just got trapped. And they were like, right, I'll set my stop 25, 30 points or whatever, 25, 30 pips down here, all right? They're keeping the money trapped in there. They send it back up again, all right? Then they pull it back. The wicks are there. Okay, this is what I mean about the textbooks that people read about wicks. And, there are guys that probably, kill it with wicks. But the true story behind a wick, all right, is market makers, people are saying it's a rejection. Well, it's physically, it shows that price was at that point and now it's at a point below it. You would deem that as rejection. But for me, and looking at it, it's telling me that market makers are taking the liquidity. Excuse me. They're taking the liquidity. It's stabbed. They can see what? Excuse me, I'm choking here. Excuse me, sorry about that, guys. All right. Yeah, so market makers are taking the liquidity that's trapped up here, triggering it, and then bringing price back down. So I know guys, I think it's called Wicks Don't Lie, where their idea is that where a wick is previously, it's going to be seen to again. I like how they use the wicks, and it's a good thing, but what I'm talking about is directly straight from a market maker, and he's pretty much, told Steve Morrow how they do it. So I'm putting my money there with the market maker, right? Because any other system out there is dog shit. The market maker, it's his business, it's his system, it's his approach. Why would you want to challenge it with something else? As retail traders, who are we? We are nothing to the market. We are the liquidity. We are the source, because there's millions of us trying to make a quick buck. All right. And it's when we need to start paying attention to what's really happening. Market makers know what information we look at. They know what we look at, and they play off that. For example, let's look at Fibonacci's. All right. Let's look how you get trapped in Fibonacci's. So let's take a low and take a high. All right. Where's the 63? All right. So there's your 61.8 zone there. All right. And then you've got your 23, your 38. All right. Now, the market makers know that there are guys that trade off these points. They know that they are target areas for profit. They know that they're stop losses. Why? Because all the books that everyone buys, okay, on trading, they tell you to use it like that. Well, what is that? And then people question, why do they lose? Why do they change systems? Will Ether dump again or not? Well, let's talk about it now then. Let's jump off that. Will Ether dump again or not? Okay, well, look. If you consider its behavior the last few days, all right, they have been getting Ethereum cheaper, and cheaper. These red candlesticks are not just sell-offs. They are players stepping in and buying Ethereum cheaper. Yeah, you're not going to find no institution or any market maker buying Ethereum up here. No chance. They are never going to buy at a high. They're going to make it so that they can buy it down here. Because by the time it's got back to this high up here, all the guys that have been hesitant to buy Ethereum because it was down here, all right, and they didn't want to sit for any drawdown, they like to see the idea of, oh, it's rising, I'm buying, Those institutions are buying down here, and when they get up here, they're looking to sell. And why? Because there's retail traders stepping in and buying in this area, so the liquidity is there for them to sell, and then before you know it, they've got another drop. And then they repeat the process over and over again. So will Ethereum dump again? There could be a chance that they do dump again. It's cyclical. They cannot not allow it to make it dump. Here's this image here. We're going up, down, peak formation. It will dump again, peak formation, continue to the upside. It has to dump. Because if it doesn't, then there won't be a market. All right? Now this, everyone was going crazy about, Bitcoin's tanking and, Ethereum's dropping, we're going to see it's all going to go red. Well, guys, you got to understand, this has been trailing upwards for quite some time now. Look at it. Some profit has to be taken. Look at how smooth these moves are. Okay, smooth moves to the upside. Slow trend and slow and steady rise is the true trend. The fast move like this isn't. That's the false move. That's the move where the institutions are like, right, we need to get some money back now. Let's start taking our money back. From here to here is where everyone was getting excited about Ethereum. All right. And that excitement was liquidity for market makers. And then they started this. They trapped all the guys who brought Ethereum and they used their liquidity to get their money cleaned. And now down here, you've got this big pump of volume. And then we've come all the way back to the range. All right. I believe that because we've shown support at the M2 point here, we'll see Ethereum hit easy back to 1377, $1,377. That's what I think Ethereum will do over the weekend probably. It might just trickle sideways for a little bit and then back in on Sunday night where there's, when the Asian Open and Sydney Open, it will probably just pump up again. All right. But I would need to see more, notable volume at certain points, because it's at the end of the day, we're going to see this pull away from the 50-day and it's going to come back and retest it. That first retest to the 50-day. So when this goes upwards like here, let me just get my tool out. All right. And so when we see the 50-day trail up this way, price will need to come up, bounce off it. All right. And then continue upwards. I'll be more comfortable in adding on the break on the continuation of that. I would even add down here or even add down here. All right. I would never trade. I would never enter on a breakout. Nah, never enter on a breakout because your stop loss would be too much. You would, if you entered here, okay, and you put your stop down here, what's to say that they wouldn't actually try and take out this area again here? And you're thinking, oh shit, am I going to get hit, or is my stop going to get taken out? Am I going to move it? Push in a bit of a difficult situation. So by entering in this area here, all right, they would have done the move and the momentum would have been behind the move already. All right. And you wouldn't be thinking about putting a stop, and you probably would have been out by the time it got to here anyway. Quick 50, 60 pips, So with the live stream video that we've got to understand that Ethereum, it is all on speculation, guys. There's no economy behind Ethereum. Well, there is an economy behind Ethereum. It's the blockchain as such. But what I'm saying, in comparison to dollar yen, all right, it's not like there's going to be a non-farm payroll for Ethereum. So when we're looking at its price action, we're looking at it genuinely from, a true supply and demand perspective. They're not going to, send price sideways, pre non-farm payroll or before President Biden speaks, or, before the Japanese yen monetary policy comes out. It's just going to go in the direction that it needs to go. If someone comes out with some information about Ethereum tonight, Ethereum will just run because everyone will go to buy Ethereum. All your exchanges will be like, right, there's a big influx of Ethereum, and against the dollar, it's just going to rise and rise and rise. Now, because we're at 3:30 in New York right now, okay, based off my time settings here, all right, we're probably going to see price it's just going to trickle a little bit, or maybe just trickle to the upside, all right? But remember, Ethereum, the cryptos, they stay open continuously, all right? Which we might see a few corrections, and then on Monday, we're going to see, hopefully, the M4. That's my price projection. Sorry about that. Can you hear me? Let me know if you guys are still in here. Guys, are we still here? Who's in here still? Corey, you there? Don't know what happened there. I had a blip in the system. All right, well, guys, look, we've pretty much covered a lot of the stuff on here anyway. All right, hey, Alexander. So, yeah, we've covered most of it anyway. So I just wanted to give you guys just a brief discussion on what Ethereum did. But that's my projection. You know, the M2 is holding here. We've got the M4. This is on the 1 hour time frame as well. I like to do the entry, a lot of entries on the 15. But just pay attention to what price is doing, guys. You know, don't cloud your mind with indicators. How you doing, dude? Yeah, don't cloud your mind with indicators. Focus on what price is doing. All right? Focus on that. It's like, I mean, look at this here. Guys saw that price had come back up, touched the 50-day, and there were guys who were short on Ethereum. So they started getting busy in this area here. Price changed hands very much in this area here, okay? It induced a lot of guys to believe that we were going to continue to the downside. So they pumped a lot of liquidity and took a lot of money off other traders, all right? And then before you know it, they sent price back up. What did we say about the red candlestick? Let's go back over here. Look what it did here. The red candlestick. Sell off, true trend. Sell off, true trend. Sell off again, true trend. Sell off. And then they started to change things about here. You know? Sell off, true trend. These green candlesticks here, these green and blue, right? Look how much volume's come in. Loads of volume exchanged hands at that point in time. That there is deemed as stopping volume. All right? It's where so many contracts changed hands at that point in time, all right? And notice they were working the lows and bringing price back up, all right? They were just trapping all the guys in here. Guys didn't know if they were going to go short, going to go long. They just didn't know. But they managed to induce enough guys to go short from this candlestick here at the Frankfurt Open. The London Open came in, effectively made it as a stop hunt low rise. So you could say out of the Asian range, this is the Asian session as such, okay? They sent price up, trail to the side, stop hunt low. They sent price down to create the illusion that they were selling off, all right? They were getting the liquidity off the guys going short, and then they changed direction and they moved it up, okay? So until this starts to consolidate, I'm looking for a level 1 because the peak formation for me has been locked now, all right? So this should hold. So I'm looking for price to consolidate, okay? Probably come in this direction here, lock the peak formation up here, level 1, and then level 2 start below that area, and then we're looking to go higher. So I'm effectively waiting for this to happen. Get my chart up. I'm waiting for this W formation up, level 1, level 2, level 3, and the process repeats itself. This is exactly what we're waiting for with Ethereum. All right, peak formation, which is right there. Level 1, so we are now here. This is level 1. We're waiting for level 1 to start consolidating. All right, so it might trickle a little bit further up to the upside here, and then it will come back down, test the 50-day. That would be your level 1, that high. And then until that high is taken out, we would then deem it a level 2. So come back down, takes out that high, goes up, level 2 end, level 3 start. Level 3 is where price gets busy, okay? It starts getting busy and choppy in that area, all right? And then it just changes. I mean, look, it did it over here as well. Look, like, just change that shit. What on earth is that tool? Right in. Did it over here. Look, M formation. We did it from here. W pattern. For those guys who can't see it. W. Level 1. Level 2. Level 3. M formation. Down we go. You know? It's if you can see these patterns, okay? You see these patterns, you'll start trading like that. You literally start trading with charts like this. You won't need anything else because it's the pattern. You could even go down to, you know, if you want to get really good at it, you could even just do that. Get line charts. Oh, look. M pattern. M pattern there. Here we go. M, drop, level 1, level 2, level 3, peak formation W, level 1, level 2, level 3, M pattern. Guys, it happens over and over and over again. All right. Now, you might think, yeah, it may be easy for you, but guys, this is what I did, okay? I sat and watched price. I went through price over and over again, and I drew M's and W's every time, every day. You know, you can see this is, look, how many times, and that's one folder, all right? And then we've got, effectively, in this folder here, we have got, where are we? Look at this folder. All the pairs are there. You know, and we've got drawings from, well, I didn't do much on that, but I've got charts all over the place. All right. And this is something that you guys need to do. You know, you need to train your eyes to see it. So then when you do pull up a chart, you can see Ethereum. I mean, look, don't get me wrong. It doesn't work all the time. I mean, look, we tried it here. All right. We tried it here. Price came down, came up, came down, and, you know, we were wrong. Well, we may not have been wrong because we still could have took a trade, because we could have taken a trade off the confirmation of the second leg, okay, which for me, experience would show that it was at the cross of the 5 EMA and the 13 EMA. Man, I'm losing my words. Okay, so the cross of those two averages there, I would have entered probably at this candle here. Take myself a few pips there. And up there as well. It would have been out. Happy days. You know? And then start again. I mean, there was an M pattern here. Up. You could have took that one there if you wanted to. A bit, you know, variation on the theme as such, but it was a bit of a dodgy M. Okay. But you could have simply just traded the shark fin up here. Now, guys, I'm throwing you these different terms and what have you, but over this week, I'm going to be completing a video which is going to show you all the indicators, all the tools that I use. I mean, I haven't really used any indicators here, guys. You know, I haven't, you know, I mean, this down here, it's really just for imagery purposes. It just shows me the volatility on the RSI. That's it. You know, and even that is a little bit laggard as well. You know, I mean, I don't use anything else other than moving averages and breaking down price itself. You know, just understanding what is price doing at certain points in time. You know, looking at previous, yesterday's high and low. What does price do in that area? The range daily low. You know, whenever price is close to its range daily low, you know that it's effectively achieved its ADR at that point. Okay, and it needs to respect its ADR because market makers can't allow price to keep going down and down and down. They need to keep a market going. So they have to change the direction and bring price back into the range, back into the medium. Now that we've got the 50-day crossing above the 200-day on the 15-minute and it's crossing the 800 EMA, there's no reason why we can't see price from the M2 all the way up to the M4 before it starts to consolidate. I don't see why that can't happen. You know, if anyone is long Ethereum, then, you know, it's pretty much happy days. Because look, the move to the upside is progressive. It's nice and slow. There's no surprise candles. Exactly the same here on the hourly. Nice move up to the upside. Aggressive sell-off. Upside, nice and smooth. Nice and smooth. That's what you need to be aware of, guys. Okay? So, you know, has anyone got any questions for me? So your prediction on when would be a good time to enter? Look, I mean, when I say prediction, look, I don't know where price is going to go. I'm giving you my opinion on what price is doing right now and what I understand of price. Okay, now, I'm basing it on the fact that we've been selling off for quite some time. Okay, we've been adding positions. So we're going to want to see a profit from there. So as I said today in the stream, all right, when we were here this morning, everyone was saying, should I buy now or should I sell? Buy or sell, buy or sell, all right? Well, I was saying to everyone, look, price needs to close above the 50-day moving average for me to start paying attention to it. It would need to retest that 50-day, all right, for me to convict it to go in. And if you look closely here, it's exactly what happened, all right? It broke the 50-day, came back to retest it, continuation. An entry there would have been fine. But it's all down to your You know, what's your plan? What's your goal with Ethereum? Are you buying to make, you know, a couple of £100 in the next couple of hours? Or are you actually buying to hold? Okay, because if you're buying to hold, buy now. Buy now while it's rising. But if you're actually trying to, you know, make a scalp of Ethereum, well, you're going to have to wait for price to respect certain levels before you enter, because you don't want to get caught on the wrong side. You know, for example, if you entered on this big green candle, you would have experienced a nice little drawdown here. Okay, and that there was just to take out a few stops of the guys who entered long here. Long term, 2 years. My friend, anytime. Because if your holding time is going to be 2 years, it doesn't matter really when you buy Ethereum. Right now, the crypto world and the space itself is getting a lot of attention. All right, you could call it a bullish market. All right, now will be a good time to start loading yourself with cryptos. I'm not giving financial advice. I'm just saying to you guys, the logic is everyone's talking about crypto. So, you know, jump on the bandwagon. You know, everyone's talking about that stock Neo. Everyone's buying Neo. You know, go with the trend. If your goal is to make, you know, hold Ethereum for 2 years, looking at your entry is just not really there. You know, you're not really concerned about an entry point, really. It's just a case of just getting it in good. You know, I mean, look, if you entered now, say you entered at the low range daily low here, you know, you would have been in some decent profit right now. You know, it's trailed up quite nicely. You know, happy days. But if your plan is for 2 years, you know, it's there you go. Yeah, so that's cool. Is using M15 for analysis easiest? I'm a scalper by trade, my friend. You know, I'm a scalper, and the 15-minute time frame is like me looking at the monthly time frame for a scalper. But the reason why I'm looking at the 15-minute time frame, because a lot of my scalps, okay, I base them off the 1 hour or the start of the 1 hour candle. All right, and I'm able to see cycles much better on the 15-minute and the 1 hour. Okay, sorry, the 1 hour time frame will give me the longer term trend on where we are. All right, the 15-minute will give me the breakdown of the formations. All right, now these peak formations, okay, they don't just work on the 15-minute, they work on the 5-minute. All right, they happen on the 5-minute time frame and they happen on the 1 minute time frame, but they happen very frequently on the 5-minute and the 1 minute. Okay, like, I mean, look at this. You've got an M pattern here. All right, quick M pattern right there. But because you're seeing it on a smaller time frame, that means your target has got to be small as well. So where they shift the zone, break from the 50 to the 200, that's your profit target. From the entry of the 50 down to the 200, maybe the 800. You know, we didn't know it was going to drop all the way down here. You could have re-entered on the test of the 50. So you could have re-entered on the pullback. So level 1, all right, pullback, level 1 end. Level 2 is pending, break down, level 2, all right? And then you've got level 3 forming, and then you've got the W pattern right here. W pattern there, price goes up, 5-minute time frame, back down there, continuation, enter here at the price crossing over the moving averages, enter, up we go, first level, level 1. Okay, we need to break of that pullback consolidation, continuation, level 2, done right there, level 3, M pattern, down it goes. That doesn't happen by accident, guys. You're seeing it, and the more you watch the videos that I upload, the more you're going to see this happening over and over and over again. All right, and when it starts getting boring, that's when you probably are ready to start putting money down and trading. Because you'll be able to see these patterns. Trading has to be boring, guys, because it means you're sticking to a system. All right. If you want to start playing and, you know, getting excited with trading, all right, just go to the casino, guys. At least you know you're going to leave from there because you had to travel there. Okay. The problem with trading, it's available, it's there, it's here all the time. But you want to make it as boring as possible for you guys. All right. Because you know that you're waiting for a level to form. All right. You know, you're seeing these candles and sticks, and you know, if you're looking here, if you were to just consider this chart here and you were here, you would know that the peak formation had been formed. All right. It came up, made a high, and it's now pulling back. You know you're expecting another push to the upside because it's consistent with the peak formation. They have to work in cycles. All right. And that's what the market makers do. The 15-minute time frame is the best time frame for it because you can see the cycles. You know, for every 4 candles, it's an hour. All right. And you can see the candles much clearly and the peak formations much better as well. All right. So if anyone's got any more questions, fire away, guys. You know, I'm chewing your ears right now. You know, I'm going to be doing another video shortly on catching up on the week from all the Forex pairs as well. But if anyone's got any questions, just fire away, man. Is anyone in here from the live today? Did anyone watch the live stream? Was anyone in it long enough to see this move break out? Okay. All right, and guys, well, listen. Thanks for passing through. Okay, hold on. Hey, thanks, Varma. Bharat Varma. If I'm saying your name correctly, please forgive me if I got it wrong. I mean, I don't know. That's all good. You can go and watch that stream again, but just, you know, fast forward it, man. You know, get the cursor because I don't change the screen a lot. I don't do it. There's no discussion on it either. It's no audio. Just get the cursor and just scroll across and just keep an eye on price. All right. Just pay attention to what price is doing. And what you'll find with a lot of my videos is we don't talk about indicators. We don't talk about MACDs. We don't talk about anything. All right. We look at price because that's all we have. You know, that's all we can use. All right. But I'm glad that everyone's liking it, man. You know, that's me. I'm doing it correctly, guys. And I've seen the other guys that are, you know, the analyst. I mean, I'm not an analyst, guys. You know, I don't have a background where I have been and I've worked at the financial institutions of the world where I'm able to macroeconomically break down and microeconomically break down a currency pair or a crypto pair. You know what I mean? I'm just basing it off my experience. You know, I've sat in front of my charts for years. All right. And I've seen patterns happen over and over and over again. All right. And I'm still learning. You know, I am still learning. I am no way an expert, you know, and I don't want that to come across to anyone either because I make mistakes, you know, and I'd be lying if I told you I didn't. That's that guru kind of shit, you know, and that's not me. For me, I love what I do. I love talking about trading, right? The science behind it, the mystery behind it. I'm talking about peak formations and M's and W's, but the market makers can switch it up at any time. You know, yeah, we can see the cycles 1, cycle 2, cycle 3, but they can also change up that cycle at any point. And as long as you've got that mentality in the back of your mind that at any point anything can change, you can then approach it with a clear head. You know, there's no attachment. And that's Mark Douglas for you. Mark Douglas, Trading in the Zone. Get his book, buy it. All right? The guy's passed away. He was the pioneers of thinking about, you know, accepting and seeing probabilities in trading. All right? Because they don't teach you that in these books. They don't teach you to think in probabilities. Go on. Oh, who's screaming? Go on Amazon and buy a book, okay, on trading. You know, they'll give you every single indicator under the sun. They'll talk about RSIs, stochastics. They'll talk about support and resistance. Man, support and resistance is such a funny concept, all right? Because there is true support and resistance, and then there's just drawing trend lines, all right? And whenever I'm on Twitter and I see guys putting up, you know, Bitcoin's price movement, and you know, it's just so funny. And even with currency pairs as well, like those support and resistance lines, they're not there because, you know, you've decided to come up with them. Like they're fake. They are fake support and resistance lines. The true support and resistance, okay. Could you please put picture of the cycle pattern to the Discord chat? Go into the Discord chat, Alexander, and under the channels, all right, it's in the indicators part. So search the channels, okay, and it's in the indicators part. I'll put it in the welcome chat part as well for you, all right? But if you go in the Discord under the indicator part, it will, I'll tell you what, sit tight. I will get it for you now. Just wait there. I'll share the Discord part where the actual indicator is, all right? It's called the coming soon. I'm going to invite members. I'm going to share it to this chat right now. And just have a look at that image. All right, go into there, have a look at the image, and let me know what you think. All right. If there's anyone new here, you know, be sure to subscribe. This channel is dedicated to me just talking about my experience in the market. All right. I don't sell anything. I have no course to sell. I won't sell anything because the information out there is free. All right. And you guys shouldn't be penalized because you may not have had the time to try and siphon this information. All right. So, you know, get on there. And we're going to be doing this every single day, guys. Going to be breaking down the pairs, breaking down crypto. You know, it's what I do. And, you know, I hope that I can be, you know, just give people that bit of insight, you know, because this game is hard. And I said to you, it has to be boring. All right. Don't make it exciting. It has to be boring for you, you know, because if you start getting excited, that's when you start getting impulsive, guys. And these moves that you see price make, they are for the traders who are excited. You know, look, 3 pushes to the low. All right. 3 pushes is getting the short sellers excited, but they don't realize that they're forming the first leg of the pattern. And then they snap back. Then they should be bringing price back down here, but that's true strength right there. All right. The strength is there. And then they brought it back and then they continue. All right. This nice move up. So look, you can see now it's starting. It's now starting to pull back, but that's because volume's drying out. It's only New York that's open right now. All right. And there's only a few players. All right. People around the world are buying and selling Ethereum because it's a 24-hour market non-stop. All right. But the true big move, you know, is going to come at some point over the weekend or next week. All right. So this is consistent with what our pattern is here. All right. So we want it to touch the 50-day, bounce off it. Because look, since earlier on today, it hasn't touched it at all. It's been riding these 2 averages here. So it's crossed the signal averages. It's going to test here, 50-day and the 800 and the 200. Man, fucking hell. This is, if it breaks past it, then guys, you know, there's your classic example of anything can happen. You know, it's all good us talking about patterns and what have you, you know, making it look like, you know, we know what we're doing. Fuck no, guys, it can change. And you've got to keep that in your mind at all times. All right. So if anyone else has got any more questions, all right, just, you know, fire away, guys. I'll stay on here as long as you want me to stay on here. You know, are there any pairs that you want me to talk about? You know, let me know. If not, look forward to the new video that's coming up shortly. It's going to be by the end of tonight as well. And then over the weekend, we've got more stuff coming over to you. I'm just going to be going over pairs and what have you. All right. But join the Discord and we'll catch up with you soon. All right. Stay safe, guys. Yeah.